All right, everybody. Here we are. Now we're live. Welcome to Which Stocks to Trade Now with me, Gordon Scott, CMT, and you. Glad you're here. The Fed last week gave out their information that they were going to do just what they said they were going to do, raise their overnight lending rate by 1/4 of a point, or the window for it, right? And so they did. And the markets have staged a very strong rally ever since then. And that means that everything that the Fed was going to do, and in fact, what they said they're still going to do coming up, 6 more interest rate hikes between now and the end of the year, which would mean a 1.5 point increase to the to the overnight lending rate, and would put it up around 2%. 2%, I believe, would be the highest we've had it since about 2009. So, people are concerned that that could push the U.S. into a recession. All that interest rate hiking, and yet all that concern about a recession got priced in right up until Wednesday, because after that it was nothing but buyers. So that's what tells you that all of the institutional investors, all the big guys, all the analysts, they're like, well, we don't think it's going to be that bad. We took some off of our positions because we thought it was going to be, it was definitely going to have an impact, but it's not going to be that bad. We're not going to trade this thing into a bear market, right? That's what the unspoken message seems to be. Right now, let's look at these two charts, the charts that tell us, most accurately or most specifically what's been going on over the weekend since Friday closed, right? The Nasdaq and the Australian dollar Japanese yen pair, which the two of them historically are quite correlated. That doesn't mean they move in lockstep, but they're kind of close, and they don't diverge a long ways from each other. One starts getting ahead, the other one's got to snap up, or it's got to come back. So in recent days, the Fed or the Aussie yen has been leading. It's pushing higher compared to the Nasdaq, and now if we look here, it's kind of the same thing. Both of these, the Nasdaq and the Aussie yen, dropped, but Aussie yen got up and made another high shortly thereafter, whereas the Nasdaq just dropped. The Nasdaq came all the way up to its drop spot from the weekend and has pulled back from there, whereas the Aussie yen has gotten back to that point and continued higher. So to me, this is kind of a bullish stance. This is saying, hey, global investors do want to take on a little risk right now. We are looking for opportunities, and right out of the gate, you see this. That's the 925 candle. This may be delayed, like behind the opening. Yeah, it looks like that's probably what we're doing right here, about 10 minutes delayed. We'll have to see what the next candle looks like when it bears out on the Nasdaq. Although I do have quotes that are real time. Apologize, I don't have them up right away, but we'll get there. So in general, what we've got is a bullish environment. Let's look at a couple other indicators to either confirm or deny that. Here's the comparison between IWM and SPY. This is the small cap IWM, the Russell 2000 small cap index, divided by SPY. So it's like, what if we priced the small cap stocks in, instead of US dollars, what if we priced them in large cap stocks? How would they do? What we want to see is this thing start trending higher in order for small caps to look bullish. And if small caps are looking bullish, that tells us that the rest of the market is likely to go bullish as well. So because investors, want to take on risk, right? Sorry, I'm trying to get my real-time quotes going here. See if that worked. No. What we've got is this thing has a very long downward trend, almost a year-long downward trend. And we have not broken that downward trend yet, but we have made a very significant move up. Now, we had something like this several months ago where, it broke this downward trend, came back, retested it, went back up to this level, and then made a big downward move. So just because it breaks one downward trend doesn't mean you're on your way up forever. However, it does usually mean that there are opportunities, for good plays. We haven't quite made it there yet, but this is a stronger move higher than anything we've seen over the past year. So as long as this continues a little bit more, then we can expect possibility of a continued upward trend in stocks. And let's see here. Okay, so just out of the gate, the Nasdaq is on the way up. Let's look at why that's important. Here's Apple, and this is today, right? Yes, yeah. So we started down a little bit, but we've come up. And Apple, it's a really messy downward trend line, but it looks like it's on its way to clearing that. So that's interesting. How about this? Microsoft. Microsoft has this huge head and shoulders pattern. Now, if you've heard me over the past couple of months talking about this head and shoulders pattern, I've said before that I don't find head and shoulders patterns to be highly predictive about what is going to happen next. Head and shoulders patterns are just as with most patterns, they're just kind of documenting a bit of a trend change, right? Higher highs, higher lows. Here's higher high, but this one fails to make a higher low. Then once it fails to make the higher high, that tells you that's the possibility of the trend change, right? What I do find is highly predictive is a failed head and shoulders, right? Because what happens is that if in fact you get this downward, short-term downward trend, and it doesn't keep going, then that means that what happened right here is buyer enthusiasm. People coming along and saying, whoa, stocks are a discount. Microsoft was up here and we kind of liked it, but down here we love it. So they plow in and they buy. When you have a failed head and shoulders pattern, it's between a 65 and 70% probability that indexes will go back and make new highs. That's a big deal. That's a highly that's an edge, right? So I'm looking at that here. Why do I care about Apple and Microsoft so much? I do. I mean, because they are the most influential stocks in the US stock universe. The reason they are is that the two of them together account for about 25% capitalization, market capitalization of the Nasdaq 100. So these two lead the Nasdaq around by the nose, and the Nasdaq leads the S&P around by the nose. So basically, wherever Microsoft and Apple combined are going, the rest of the market's eventually going to go there together. The correlation is even much stronger than the Aussie yen and Nasdaq. So we really want to pay attention to whether or not Microsoft makes a failed head and shoulders pattern. How do we know that the pattern has failed? Well, the pattern says, lower highs and lower lows, meaning this is a downward trend. That's what price predictors, technical analysts who feel like price patterns do forecast something. That's what they would say, is that this is predicting another downward move, something, from here down to here, add that on to the bottom, and that's how much lower it has to go. So the forecast from this price pattern is a continued downward trend, right? Well, all you have to do to change that is a lower high and lower low would have to be breached, right? A lower high would have to be breached. And there it is right there. This is the most recent lower high. See, significant, right? And you could say, well, maybe it's this because, well, but this wasn't that many days from that, and this is about the same time. So really, we have to pay attention to that high right there. All Microsoft has to do is get above that, and then the historical data would say that the price will have a greater than even tendency of getting back to a new high. That's a long ways, especially compared to how much you could risk if you were wrong. Like if you wanted to make this a a stop loss right here at around 275, stocks currently right around 300, you'd be risking $25 a share, if this idea was wrong. But if it was right, then you'd have a run of about $50-$60 per share on the way up. So you can see why that's an interesting trade setup. You could also make the case that you wouldn't have to wait for it to come all the way back down, right? In other words, hey, if this is just sideways fluctuation, so be it. But if it's in fact going to get back up there, it should be starting into a new high. So once we break this, then you can just go like halfway between here and here, because what that says is if it gets lower than halfway, then you have a greater than 50% probability that it's going to come down and touch or break the new low. So so that way you could reduce the risk and reward setup to something even tighter, like a 4-to-1 kind of thing. So we're going to keep an eye on that. Microsoft hasn't gone up and made a new high above its close. In other words, today, so at least so far on this chart, let me see if I can bring up the real time. The real time is still that way. Yeah, we are still below where we closed. Bring these over. Okay, so here's the QQQ right at the start of the day. What do we got? Nothing but buy, right? And Microsoft is looking strong too, but it isn't there yet. This is where the market, or where Microsoft closed right about 300 or so on Friday. And wow, we're actually getting really close to that right now. So we're going to let this chart percolate for a bit while I show you a couple other things. Now, with the idea that, hey, it could be a good time to go looking for buys, longs, not inverse, trying to play the downside, right? I mean, you could try to play the downside, and technically the charts still are in downward trends. But I'll show you one more thing that makes me really feel like bullish is the right way to be looking right now. Now, this chart here, I captured about half an hour ago before so it's based on Friday's data. It's not based on the current data right now. In about 5 minutes, I'm going to reset this. But I want to show you these stocks that looked good from Friday. And these are the low-cost growth stocks that have the highest likelihood of creating a short squeeze situation. This is not based on the fact that they have earnings coming up or anything. We'll add that filter in just a second, but I just want to show you what we're looking at. We have Hrtx, float short of 34%. That means 1 out of 3 shares that is being held in this stock is being held in a short sell. And the short ratio is a whopping 15 days. So in other words, if people started people who were short said, we got to get out of here. This is bad. I'm holding a short position. I'm going to get killed by it. If they started getting out, it would take them 15 days to fully get out. And that's if they trade 2 million shares a day. And what happens is when you get a short squeeze panic, that volume goes up really fast. And this short ratio, tightens. But that's why you want that number to be as big as it possibly can be, because it just means that there are so many people that would need to get out of their short positions. And there's such a greater chance that the short squeeze would take place. FUV is also looking really strong. I got to admit, I talked about this one, I don't know if it was last week or week before, and boy, it came right down. I actually tried to make a trade on this, set my stop a little too tight. I set my stop at 622, and it took it out, and now, well, it's back up. It's still a good look, though. In fact, the float short has increased compared to where we've seen it before. And the short ratio is still at 13. I don't think the short squeeze has played out on that one yet. These other ones, Hrtx, that's also possible, but not quite as enticing. And this one, CVM, we're talking about 20% float short with 11 days, but the price is clear down at $5. So it's basically, penny stock trading there. And I think that's about it for, see, because below that, you start getting below 10 on the short ratio. All right, now let's see if any of these have earnings in the next 5 days. And the answer there says no. So I'm going to reset this. See if we're getting. See, that looks like the same list, so I'm not certain. This thing takes a little while. Oh, I apologize. It says you're not able to see my. Oh, good grief! I'm so sorry. Try that again. Hey, everybody, thanks for hanging around. Hopefully you can see my charts now. Is that right? Okay. Yeah, hey, sorry about that. Wow. I had shared them, and then when we had that, yeah, well, okay. Let me run back through the chart so you can catch up with where I'm talking about. So here we've been talking about QQQ. This is real time. The first 15 minutes we had buyers. Now, just now, we've got this huge selling candle coming in. Microsoft was getting right to that point where it was going to, be where it opened over the weekend, where it had closed on Friday, got right to that point and started selling right down. Interesting, isn't it? Because see, if we're going to continue going higher, then we should have pushed right through. But we hit right at that level and started pushing down. Well, we'll keep an eye on this. Here's the Microsoft chart I was talking about. Big head and shoulders. And then Microsoft is really close, coming back up to that $303 level and breaking through that. Hasn't, and we were looking at the possibility that it was going to come up, hit this and keep going, but it hasn't. So that's a little bit of a worry if you're bull right now. And Apple, as we mentioned, is kind of a messy chart. Apple's actually continuing to push higher, though. Push higher. All it's got to do is break that downward trending line, and that'll be its upward trend. IWM compared to SPY, this is the downward trend I was talking about. We're a little bit of ways away, but we've got a strong push from where it has been at its low. And the past couple of months, small cap stocks have been outperforming large cap stocks. So that's worth keeping an eye on. Now, what are we talking about going forward? Is it really a bullish indication? I think it is. And this is probably the biggest reason why. And let me show this to you. I'm going to bring up a chart of the SIBO Volatility Index, or better known as the VIX. And let's look at what's going on with the VIX. The VIX has been running hot. And if you pull it back, past 6 months, it's been trending higher. But we're almost, so what this is a linear regression channel with 3 standard deviations to the upside and 1 standard deviation to the downside. That's because the VIX is always skewed this way, right? When markets go down, they go down fast, which means the VIX, which is sort of upside down from the market, when it goes up fast. And so the up moves are kind of stretched and distorted, and the down moves are kind of compressed. So that's why I like to use these zones the way they're positioned. What we're looking for is whether or not the VIX is going to come all the way back and get underneath that sort of median line. Well, it looks very close. What's surprising to me is even though we've had this strong upward, rally in the S&P 500 and the Nasdaq and so forth over the past 3 or 4 days, it's not just that we've had the rally; it's that volatility has really given up its scary levels. See, we're up here around 30. I mean, that's at 30. option traders are saying something bad's going to happen, something really bad's going to happen. And usually when you get to 30, then the next stop is somewhere between 40 and 50, where it bottoms out and then comes all the way back down. And it could still do that, but we have retraced clear back down below 25. And all we got to do is get down in here below 23, and then we're in this sort of lower, more bullish region. So they're all kind of going together, but it's the full distance that this thing made in 3 or 4 days has come all the way down. And we've done this before, and we still turn around and went higher. So yeah, I get that. And we are trending up on these lows. That's the big concern. Volatility pricers are still saying, hey, there's more worry coming, at least by this trend. So if in fact this breaks, then we have to see whether or not this trend right here is going to break. And that trend is this thing, just like that. As you can see, it's about the same place as the middle. And so if it breaks the middle, it's going to break 2 trends at once. And that's a big deal, because it says this is the trajectory that fearful option traders, option sellers have been on. And now all of a sudden they get below that. It's like, okay, that trend is different. Something mentally has changed for them. And they are now thinking about the markets as an opportunity, whereas before they were thinking about the markets as a risk that they had to protect themselves against. So, so I mean, we're not there yet, right? I just feel like we moved so fast, and we're in such a position. So if you see the VIX over the next week, get down below this level of 23.5, say, if it gets below 23.5, that's it. It's broken these trend lines. That's a bullish signal. Apple, as long as Apple's going to continue to go up and Microsoft is going to continue to go up, then that VIX is likely to get pushed in that same direction. Well, right this moment, we're not seeing that. So, maybe I shouldn't be talking to you about bullish moves. But before we get done here, let's see if we can go back to the search screeners and look at those charts I was telling you about that are short squeezes. Because if in fact people start buying, buyers start coming in, then they're going to scare out the short sellers. So this is the company I was telling you about, Hrtx. We're definitely going to want to look at them. But now I also want to refresh this because it has like a 20-minute market delay. I think this is still based off of Friday's data. Well, maybe not, because these volumes are now very low. The average volume was 200, and that's like 141. Yeah, we'll keep trying this. But if in fact Hrtx is the one we're looking at right now, it's only a $5 stock, $5.32, but yeah, it's got a real opportunity, I think, for getting hit by a short squeeze. So let me bring up that chart, Hrtx. Earnings came out a little while ago, and it was a positive surprise for earnings. They, company's losing money, but it's losing less than analysts expected to. And here, sales are down 20% less than expected. That's actually a really bad number, right? Well, that's probably why it dropped like this. So the question is, are we going to find some sort of lift, some sort of support down at this level, and is going to turn around? Because if it does turn around, look at what you're staring at. We're 524. The gap is $6. You fill the gap, you'll be up to $7. This thing could get up to $7 just if people feel like the prospects of this company have turned around. It's been losing money for a long time. Yeah. And so if all of a sudden somebody thought this company was going to start making money, or even get close to making money, this thing would rocket. It would turn around and start retracing into this trend. So you can see there's a lot of potential here. You can see that's why the short, every time it gets higher, somebody adds to their short position, and they just keep pushing it down. The short guys are like, yes, go out of business. We'll be able to keep all that money we started, right? If, however, this company were to start making money, those shorts would bail out in a hurry, and it would really start taking off. How are you going to know that this company is not going to go out of business? You don't. The safest bet right now is yes, it's going to go out of business. However, if it's not going to go out of business, then the returns are going to be very dramatic. So I feel like what the play here is to consider watching this thing for the next week to see if it has any amount of buoyancy. If that's what it's doing right now, right? If it sort of stops and then it gets up and makes a new high right around in here somewhere in the next week, that's probably an entry signal. But I think this one's got a little bit of weight. So it's one you want to watch, Hrtx, for the coming week. And if you can get a chance to buy it, down here, even at a new low, but after the new low, it sort of seems like it's going to bounce up. Then what you do is you make a buy and then you set the stop loss just a little ways down below the last low, whatever it is. And you're wrong, you're wrong. Don't buy so many shares. Don't load the boat. Don't put your entire account in it. Make it so that if you made a loss, the most you'd lose in your account would be 1%. Okay, so that's, you buy enough shares to make it fit that. And if you do that and it comes all the way back up and starts making new highs, great, you're set. You can even add a little more and so forth. But generally speaking, you want to make it so that you are taking the risk, but it's a small risk to your account. Okay, let's go back and look at the others. I mean, as far as a small cap stock, I think that's probably the one that has the best opportunity there. And that's current data, so it's updating. All right, good. Let me look at gap stocks. Is there anything gapping up today? Oh, yeah, sure. ExxonMobil and ASB, which is banks. Okay, so gap trades are highly effective entry signals. And if we just look at ExxonMobil, I mean, it's gone all over the place, right? The question is, sorry, let me back up. Oil had this big run up from the whole Russia-Ukraine thing, but it came up here and wiped out all of that. So everything above this level is fluff. Right? Everything here is just panic, fear, hype, whatever. So the fact that we came down and stopped and people started buying means all this part might have actually been fundamental based on price of oil, supply and demand, and so forth. So is this the fact that it gapped up and moving in? Is that an indication that the fundamentals are going to push the stock higher in an upward trend? I'm a little skeptical of that personally. So I wouldn't want to be a buyer that was waiting on this huge trend. However, I think what's really easy to predict is the fact that this thing will go up at least a little bit. So what if I were to do this? What if I were to trade on the fluctuation, right? I'm going to use blue for an entry, then I'm going to use red for a stop loss, and green for a profit-taking target. So if I say I'm going to buy this at 81.40 or wherever close by, and then I'm going to set my stop down here at let's call it 76.25 or lower, right? You could even go just 76. Well, let's make the math easy on myself. We got 81. We're going to call that 81.50, and we're going to call this 76. Okay, so that's $5.50. That's the stop loss we're making in this scenario. And so if I'm going to do a stop loss of $5 or $5.50, then I'm going to take profit at about 275. In other words, half of that distance. So whatever I pick as the stop, I take half of that distance, and that's where I take my profit target. See, I feel like this is a really high probability trade. I don't know that Exxon's going to get up there and keep going forever and ever, but the idea that it's going to fluctuate a little bit more than half of its potential, stop loss risk. Oh yeah, that's very feasible. In fact, that has a 66% chance of winning just by random setups. And if I'm right in picking stocks just a little bit more than wrong, then I would be telling you about something that had 70. So percent probability. So if in fact you were to do this instead, though, say, all right, here's the gap. What if I just went right below the gap? And this is buy 81.40 and sell 80 or 78.60. Let's go 78.40 just to make it, an even $3. Then I pull this into $1.50. I mean, is ExxonMobil going to go $1.50 higher than it is right now? I mean, that seems like a no-brainer. You're going to be able to capture that. You make this trade over and over again. I made this trade 3 times on the way up. And you're like, well, Gordon, why didn't you just buy here and hold to there? Yeah, because I don't know if I'm buying here and I got to hold on to there. That's why. I like these short-term hit trades. That's what I do with large cap stocks. And especially, I look for the opportunity to use options to make these plays. But here, as I say, I made 3 that were winners on the way up. And so this one here, I love the idea of trying to do that again. And then last of all, let me revisit a chart that I looked at last week with you, EDR. This was the short squeeze stock that we talked about that was coming up into earnings. And hey, this one played out. It's not the huge short squeeze, though. There's probably still some short left in this. In fact, why don't we go search on that company specifically and look at what its short float is. Oh, see, now this is interesting. See, the short float is all the way down to 275. This was something that was way up there. The short float was high, up above 20, and it's all the way down to 275. So the short squeeze has played out already. I want you to notice that. Here, at this point, there was a lot of people short in the stock, but by the time they got to earnings and people bailed out, well, that's it. That's the short squeeze right there, or a little bit of this and some of that. But that's something that pushed the market higher, not as high as I was hoping for, 20 or 30% gains up into here, but it did push it into that level. And so the question is there potential for it to continue going higher? Yeah, with the short squeeze down as low, I wouldn't give it as much of an expectation as I was expecting there to be. But that's the kind of thing we are looking for. So Hrtx, that's idea number 1. I want to give you 3 ideas, and let's look here. Now this has been a short of late, Ford. But if in fact we see Ford turn around, then that, hey, that probably the rest of the market's going to turn around also, or at least the industrial sector. I don't think we're quite there yet, but all we've got to see is this thing come down and then go back up and make a new high. And that could happen in the coming week. So Ford would be my number 2 to keep an eye on. Why would I say that? Well, because you look at AutoNation. See, Ford is new cars. AutoNation is used cars, as is CarMax, right? Now, CarMax has been struggling, but AutoNation is starting to do well in recent terms. What that means is the people who are buying used cars in the U.S. are paying a premium. I was talking to a used car dealer the other day, and he said over the past 6 months to a year, used car prices have gone up by 40%. At some point, those prices have gone up so high that it makes used car buying prohibitive. And people say, well, at that price, I might as well buy a new car. And so when people make the mental shift to start buying new cars, that's when you see something like Ford going up. CarMax has not made the turn, but AutoNation has. And so they're already reaping the benefits of these higher priced used cars. And I think it won't be long before we see Ford and GM kind of make that turn. And I don't think it's going to be immediate, right? But if analysts get an idea that, hey, it's coming, that's when this downward trend stops. And it's quite possible that if, in fact, that does come along, people shift over to buying new cars, then this thing takes off, and you've got both in GM and Ford an opportunity for stocks to really make that turn. Here's Toyota, and it's messier, but it's a similar dynamic. So, watching for any one of those 3. Of the 3, I like Ford, having been oversold the most. And so Hrtx for 1, forward for 2. And then the next one, let's see. I'm going to go to my watch list. The stuff that I have searched last week that was in low-priced growth stocks, I put on here. Here's one here, SRRA, that I thought really had some potential. It didn't show up on our screener this time around. So let's go and let's clear everything and bring up SRRA, see if it's still in a short position. This is a cancer treating company. They make stuff. Yeah, okay. Short float is still 31%. And the short ratio is only 1 day. The reason for that is that the float size is so small. The where's the float? Oh, there it is. Shares float. It's only 3.5 million, and the stock trades at average volume over 1 million a day. So it's the idea that, hey, if all of you want to get out short, they could get out in 1 day. It's true. However, they would have a hard time finding tradable shares. If people who had the shares say, I don't want to sell, I like it, right? Then it wouldn't take much for these million shares to be trying to find a way out, and the short squeeze could be drastic. And that would happen if, in fact, the stock continues to break new highs like it just did, right? So this is an upward trending stock for several months. And they made this split. Oh, yikes, 1 for 40. Reverse splits like that are usually a very bad signal. However, see this huge drop from here, 56, clear down to 29. It wasn't 56. This was a penny stock for a while, but they did the reverse split, and now it has higher prices, so it doesn't look so bad. They did that to keep from getting delisted. Most stocks, that's a death knell. If in fact they do that reverse split to keep from getting delisted, the price just keeps going lower and lower and lower. This one didn't, which is a very positive sign, very bullish sign. Now, what's going on here is these guys have a treatment that they think can really help leukemia patients or bone cancer patients, right? And it is that treatment has entered phase 3, which is the last phase before they can start selling it into the open markets. That's what all this, jump here and expectation is, right? My point of view is there's only 3 million shares available in this float. If in fact that phase 3 trial comes out positive, it'll take a couple of months for it to do that. But long before it does, analysts and people are going to be pouring through every statement, every little bit of research they can get. And if in fact we see this thing start trending higher, it's because those doing that kind of research believe something good is coming. And already that's what this is, right? So if in fact good news were to come, this thing could fly. This could move up to be a $50, $60 stock from the level it is right now. And so I think that is really worth keeping an eye on. Last week I looked at it and thought, I'm not sure, but now that it has broken its old high and is pulling back, I think it's a really good setup. At a minimum, you can do the same kind of setup I'm talking about here. You could do this kind of thing where you say, I'm in at 35-ish and I'm out at 28, so that's $7. And then, whoops, I just look to go up 350 higher. At a minimum, you could do this. And then what you do is you don't put this in the system. You don't put your profit target. You just have this be a mental thing. Put your stop loss in the system. Make sure it's there. I know. I get worried about people trying to run my stops. Not from here, you don't. You got so many people in between that bought or sold that, the stop down here, when you get close to it, sure, then there's a possibility the stop is going to get run. But if that is, then you want out right there, because that just means all those stops, all the people that have set stops could push the price much lower. You want to get out before that goes. That's why you put the stop right there, right along with everybody. However, that's a long distance. So all you're talking about now is getting back up, making a new high and a little bit higher. See, to me, that's a very high probability trade. But if I just put this on as a profit target that's mental, that is, not hard and in the system, then if the price gets above it, then I'll just watch it. And I say, okay, if it comes back down, then I'll go ahead and take the profit. But if not, it might keep going. And then I can just sort of use a trailing stop and follow it up as high as it goes. All right. Mervin asked, hi, Gordon, can you share the FinViz settings for the low price stocks? I certainly can. Thank you for asking. Somebody who knows how FinViz works. Very good. So what I'm going to do is share you my screening characteristics for low cost growth stocks. Now, these do not have the short squeeze. I will share both of these for you. These are the ones that are just low cost growth. There's that. And let me share with you my short squeeze characteristics trades, which is a different list. It's the one that has Hrtx at the top of it. To the extent that you find something that's on both, you like that. Okay. Now, if you're watching, you're welcome, Mervin. If you're watching this on a recording, then you can replicate this even if you don't have the link. If you have the link, then it just brings up everything I've already done. But you can go in here and just take a screenshot right now. And then when you go to FinViz yourself, set up your own free account. You don't even have to set up a free account. You just do this. But free account helps get rid of some of the ads. Use an ad blocker. FinViz is merciless for free ads. So anyway, you hit this, hit this, hit this. Everything that's yellow, put those in as selections. So you take that screen capture. I'm going to go over here to low cost growth stocks. That's a different set. Take a screen capture and then just replicate those. All right. Well, we've gone a little bit longer than usual, so sorry about the technical difficulties at first. Hopefully this is useful for you. I would say Hrtx, Ford, and SRRA are offering some really good opportunities right now. And those are my 3 ideas. Until next time, take care.